Welcome to HSBC Global Viewpoint, the podcast series that brings together business leaders and industry experts to explore the latest global insights, trends, and opportunities. Make sure you're subscribed to stay up to date with new episodes. Thanks for listening, and now on to today's show.
Welcome to the latest edition of the Global Viewpoint. My name is Oliver Kadhim. I am Head of Institutional Client Group here in Hong Kong for Asia at HSBC. And today on Global Viewpoint, I'm absolutely thrilled to be joined by Miss Ding Chen, where we're going to go and spend the next half an hour delving into the world of ETFs and everything that goes with it. Welcome.
Thank you.
Today is all about ETFs, and there's no better person to spend time with talking about ETFs than you, because you are on the road 365 days of the year, literally talking about and telling the market what they think they need. Let's start on that point. So the ETF growth story in Asia, Here we are sitting here in the last half of 2025. How has 2025 been for ETFs?
Thanks, Ollie. It's really a pleasure, to be here to talk with our friend. So I think for 2025 in Asia ETF space, the most notable thing I need to mention is China ETF markets. So you just probably know at August, China, the AUM of China ETFs surpassed 5 trillion RMB, which is the historical high, and also it's a great, very significant milestone. It only took them 4 months to reach the 5 trillion.
How long?
4 months.
4 months?
Yes.
To hit 5 trillion?
5 trillion. So you know how long it took the industry to reach the first 1 trillion?
How long?
16 years.
Wow. At the same time, I just heard that in the US, there are now more ETFs than there are single stocks.
Exactly.
So it's taken 4 months to get to 5 trillion renminbi.
Yes, from 4 trillion to 5 trillion.
In 4 months?
In 4 months.
Wow.
So the first 1 trillion took the industry 16 years. And the second trillion took them 3 years. Since then, the market begins to boom, and a lot of participants get in, and AUM grows. And I think, for this year, the 5 trillion is very important and also significant. Is also because China has a bull market for this year. And also Hong Kong, it's for ETF house, is also a very good year. So for Hong Kong ETF, the market total size, we cannot compare with mainland China. Hong Kong is still, although it's an international financial center, but the market size is smaller than China. But right now, at the end of the third quarter of this year, the total AUM reached to 718 billion Hong Kong dollar. It's roughly like 100 billion US dollars. Yeah, it's like
of the ETF market in Hong Kong.
In Hong Kong,
billion US dollars.
Yeah, Hong Kong, 100 billion US dollar. It's roughly like a 20% increase of this year. And so for CSOP, it's also a very good year of 2025. So our CSOP's AUM is reached 29 billion US dollar, and it's also, marked as the second largest ETF house in the town. And also, we have a significant cash inflow into our ETFs products. Roughly, by end of the third quarter, we have 23 billion Hong Kong dollars inflow into our
20 billion Hong Kong, so what's that? Almost 2.5, 3 billion US dollars inflows in Q3
for this year.
For this year. And most of that's coming southbound, as in it's coming from.
A lot of
that number.
Yeah, a lot of them come from southbound, also from regional. So we can see a lot of flows come in, and also the markets began to perform. And also I think it's not a short term, but also it's a long term. We will see, this sort of ETF space will have a golden period of time to grow.
Look, as you taught me since I've been in Hong Kong, this town is based on momentum, and it was on that doorstep to China, and I hadn't seen it over the last 4 years. But 2025 has been that year with various catalysts along the way, and obviously DeepSeek being a big part of that for the HS Tech move, and just made everyone realize how cheap a lot of those names were.
Exactly.
Now, we've touched on Hong Kong. I know you live on a plane as well. As far as that Asia-Middle East corridor, that was, when did we do the Saudi ETF? When was that? The 23?
2023.
2023.
Yes.
So that was our co-parenting.
Yeah, co-parenting.
Yes, co-parenting in 2023 on the, that was when we had Hong Kong names listed on the Tadawul and Tadawul names listed here in Hong Kong in an ETF. What are your plans for that Asia-Middle East corridor going forward into 2026?
Yeah, I think, we will continually to build up these corridors to bring more interesting investment vehicles to Hong Kong, and also to promote more of Hong Kong market on Saudi and also GCC countries. So right now we see a lot of inquiry from Middle East, because everybody sees the Saudi ETF, the success story of Saudi ETFs, and they do see, since the ETF launched Hong Kong Stock Exchange, and we also bring this Saudi ETF cross-listing back to mainland China, both in Shenzhen and Shanghai Stock Exchange. They see, continually cash inflow through this ETF cross-listing scheme to their capital markets. So I will see, from the Shanghai and Shenzhen Stock Exchange, for this year, we're gathering about $400 million US new capitals to get into the Saudi markets. So a lot of GCC countries come to us and also try to copy the success of what CSOP did with PIF to bring Saudi ETF here.
What about actually breaking down into the product? You said HS Tech was the big one for this year for inflows. But with the move, it's not a huge surprise. What about for next year, as far as where do you think that money's going to go, and any new ones that you're working on or thematics that you think? Is it all going to be everyone chasing AI? What's it going to be?
Yeah, we have quite a lot of different projects talk with different parties, but obviously try to bring more kids to these families.
Correct.
So yeah, we will see from tech, from fixed income side, but from my perspective is like ETF house. We always provide investors the instruments. They can either do their strategic long term pension planning, and also we will provide them tools, allow them to do the tactical allocation, hedging their risks. And ETF, the leveraged inverse ETF, especially inverse ETF, give them tools. In Hong Kong, because the past couple years, the bear market, so CSOP we witnessed that. In Hong Kong, the leveraged inverse product, the first successful one is inverse one. That makes sense, right? People need to hedge their risk, and we gather a lot of AUM over there. So right now it's like a very healthy environment for the leveraging inverse.
How about the future? Now, as we make that move into tokenized funds, where do you think we sit with that in 2026? Is that is that giving the clients what they want? Or as always, with CSOP, with CSOP, are you creating a solution before the request is there? What are your views on tokenized funds?
Yeah, I think tokenized funds will be the future. So the reason is because nowadays, if you look at people in their early 20 years old, the young kids, they are all, they embrace the virtual assets. They have more high percentage of adoption rates of the Bitcoin, tokenized things. So after 10 years, pretty much the majority of the retails, pretty much everybody will have their own wallets. So they'll have everything in there. So the tokenized funds will be inevitably become a more and more popular things. And we see, in the tokenizing or RWA, US is the leading market. But Hong Kong, I think, in this region, Hong Kong is also leading the game as well.
I couldn't agree more. And it's so nice to be sitting in the city, which is, from a regulatory point of view, the exchange, the tailwinds we have to develop these products, almost a test bed to see how that works. I know the big push and the amount of noise we've made this year around tokenized deposits, what that means to us. Yes, I've never seen so much incoming from clients around digital asset solutions. So it's how things are going to be held in the future. And it's come about so quickly because, you and I were not talking about this 2 years ago.
Yeah.
And here we are. What are you worried about then? So we've done everything which is positive and lots of blue sky. What are your concerns for 2026 from an ETF market point of view?
So, actually, this is a very interesting market for 2025 globally. It's a global bull market for 2025, pretty much. And people more and more talking about, uncertainties, people talking about geopolitical risk, people talking about coming inflation possibilities. And also, people more and more talking about AI bubbles. So probably, in 2026, some way, somehow, we are facing that risk seriously. Recently, more and more people come to ask me whether, Ms. Ding, you think there's AI bubble. So for the AI, they definitely can change our lifestyles, can give human beings more rooms to grow our society in a good way. But on the other hand, right now, too much capital is chasing this sort of concept, and we will see some extreme case comes out.
Normally, they always say a crash can be avoided as long as risk can be transferred. With an ETF, you can always buy it or you can always sell it.
Yeah, exactly.
Whereas I think there are a lot of other products out there that we're getting very excited about at the moment. Once again, if things could turn bad, how do you get out of it?
If you look at the tech bubble, the internet bubble back to 1999, something like that, if you miss the huge wave of the market. So the best way is you stay with the market, and the ETF will be the best way. You can stay in there. Because right now we cannot tell. So which one will be the ultimate winner?
But you have to have a basket.
Yes.
You have to have a basket of stocks.
You have a basket.
Which is cheap to run.
Yeah.
And the fees are not astronomical. Make it cost effective, but you're going to participate, which seems to be the theme.
Yeah.
Is I want to participate. How do I participate?
Yes, exactly. So using ETF as a tool to participate this sort of big change, a big movement for the human being. I think, yeah.
I hate to say it, but can you believe it? We've run out of time already. We could thank you so much for joining us today here on the Global Viewpoint. It means a lot to us, and thank you for all your insights. To everyone at home, thank you so much for tuning in. I hope you got as much out of this as I did, and we look forward to seeing you in the next one.
Thank you for joining us at HSBC Global Viewpoint. We hope you enjoyed the discussion. Make sure you're subscribed to stay up to date with new episodes.